back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in Landon Swan. He's a co-founder at Lightfolio. Welcome back to the show, Landon.
Thank you. Great to be here. Happy Monday.
Happy Monday to you. We're talking UPS. I don't think any investors are happy about this one. Since the start of 2022, it's just been in a downtrend. And, you know, we get some of the problems that they've had, the negotiation that they had with the Teamsters. They're paying people a lot of money now. That kind of took away some of their business. But it seems like it switched from 2021 where they were eating FedEx's lunch. Now it's the opposite where FedEx went up over 45% last year and UPS was actually down.
Yeah, you're right. And you know what? I never do this, but before we go UPS, I just want to say I was watching the last segment, loved it. And we are in agreement on AMD. We're negative 59 earnings score going into it. So
that's strong. Negative.
Yeah, very similar. You know, we see all the same things that you guys saw. The web, the data, the mentions are down, PE's out of control. So, yeah, just wanted to let viewers know that Lightfolio agrees. Yeah, but
that's
going
a
back
bonus.
to UPS,
you gave us a bonus.
I like
yeah,
it.
you know what? It's a great Monday. Let's go with some bonus stuff here. So listen, on when it comes to UPS, FedEx. Yeah, I mean, UPS is done very poorly, the stock, at least for the year. FedEx has done well. But you got to look at last quarter, too. FedEx really got crushed. We were negative 40 on that one. So we were very happy with that report. FedEx got crushed last quarter. You can see that vertical green line there at the top. But yes, so far they've definitely outperformed. But when you look at the data, actually, when you look at web mentions and also on just traffic, people going to the websites, it's actually a little bit more in favor of UPS. Year over year, it's pretty much a tie. But if you compare versus 2 years ago, UPS is kind of hanging in there while FedEx is really struggling. So this is the web visits on the year over year basis. If you go more on a 2 year basis, it's much bigger. But the data that we're seeing is that consumers, when given a preference, they do prefer UPS. Now they're a lot simpler, right? They stick to the ground service primarily, very simple stuff. FedEx is going for, generally speaking, higher margin express. They're going for freight, air, that kind of thing. So the companies do differ a little bit in that regard. And what we've seen is that UPS's strategy has produced more interest from consumers, again, when given that choice. And a lot of times they're not given the choice, and it can go, can kind of go south for companies sometimes. One example that we've seen is with Chewy, the online pet supplies company. They're FedEx, and they've had a lot of consumers complaining about the delivery services and things like that, because Chewy does a great job on their end, but once they hand it over, it's sort of out of their control, and that's actually led to decreased happiness for Chewy, and so that puts pressure on companies to make that switch. And you can kind of see here on this, on the year-over-year basis here, what's going on with UPS versus FedEx. Pretty strong change in 1 year here, where people are a little bit more into UPS. So the data for us is slightly in favor of UPS. I know that when it comes to happiness, they're about the same. They're about 53%, which is, half your customers love you, half of them hate you. It just depends on whether they got their package. But we have seen a shift when it comes to consumers showing some preference with what they're saying online in favor of UPS over FedEx. And at these prices, it's similar to the AMD play. You got to think about where expectations are. Last quarter, they reported soft revenue, soft guidance. The stock was down about 6%, I think, on that report. So I think the expectations are fairly low. The stock has bounced back a little bit since that report, but expectations are generally somewhat lower for UPS right now. So we've got the ever slightest bullish lean going into this report. It's not a big number, but we're plus 21 on our earnings score for them. We're willing to take a bet to the upside, but a lot of that, again, has to do with how the stock's underperformed and the fact that expectations are likely lower.
Landon, let's play little picture, big picture on a stock like UPS. The earnings per share is supposed to be down 32%, 244. Revenue is supposed to be down 6%. They are, is it as simple as this is a cyclical company going through a cyclical part of their business? They're doing all the things behind the scenes to set themselves up to be more profitable when this sector of the economy turns around. Remember, 2018, they came out with better, not bigger, means of getting more efficient, upping margins. If you're a long-term investor, shouldn't you just look at this and say, when the market gets better, the overall economy gets better, this is going to turn up like the cyclical stock it is?
Yeah, I think so. And I think a lot of investors watch this stock and FedEx with just that, kind of that bellwether, like what's going on with e-commerce, what's going on with, just the economy in general. And it can be a little bit of a predictor, but it's absolutely going to go with the economy. Either way, both companies will. As more commerce takes place, boxes have to get delivered. It's really simple. So yes, I do think that there's a play there that if you're bullish on the economy, you can be bullish on UPS. And between the two, you're looking at this stock performance chart. If we had data saying that FedEx was just absolutely dominant in all regards, then I wouldn't really be talking about being bullish on UPS compared to FedEx. But really, we're showing that the data that we've got, consumers, is a little bit more favorable for UPS. And given these two stock charts, it's clear which one you should pick. I mean,
Sure.
You've got lower expectations, and the two companies are both going to generally go in the same direction, generally, with the economy. One of them has been beaten up much more and has slightly better data with consumers. So, yeah, I like UPS here over FedEx for sure.
And your score about plus 21, so just over the neutral into slightly bullish. Landon, when you guys look at competition, we always talk about the duopoly that FedEx and UPS are, but Amazon, I think they're number one now in packages delivered. Is that coming into any of your data points here? Because it seems like as more people join Prime that, hey, maybe UPS and FedEx, both of their best days are behind them.
Yeah, I think that's a great point. I mean, we always talk about the Amazon effect, and I think historically we've overblown it. But with this regard, I mean, the way that they're really cutting costs by delivering their own things, and this is a whole different conversation about how Amazon invents businesses to cut their costs. I mean, that's what AWS was. It's an incredible company. I love Amazon, but yes, it's definitely a concern. I mean, if you're UPS and FedEx, you don't have that customer that you had before. But long term, I got to think that there's going to be more and more businesses that start up as the GDP grows and the economy does well, and that's going to go towards UPS and FedEx. Amazon, obviously, they'd love to have that business. They're not getting it back. So maybe the best days are behind them, but this pie is going to get bigger and bigger. So yes, that slice is gone, but the pie overall is going to continue to grow. So, maybe things won't ever be as great as they were in, 2019 or 20 for these companies. But I do think the economy continues to grow and that pie gets bigger for both companies, for both UPS and FedEx.
All right, great stuff, great data. As always, Landon, appreciate it.
All right, guys, thank you.
All right, that's Landon Swan, co-founder at Likefolio, giving us the UPS data and the bonus on AMD with their negative. But